What's going on, everybody? Back again. Just want to discuss this quick little highlight. When I learned about the volatility index, it was quite interesting. I mostly got involved in stock trading and following stocks and reading charts kind of around the time, within the year before running into the crash of 2008. And that's where I first learned about the VIX, the Volatility Index, what you guys are seeing here. And what it is basically an indicator. It comes from the CBOE's it's the CBOE's Volatility Index. So it's a popular measure of the stock market's expectation of volatility based on S&P 500 index options. So CBOE is the Chicago Board of Trade or Chicago Board of Options Exchange. I should probably know that, but yeah, Chicago Board Options Exchange. And so what it's telling us is how volatile is the stock market. And what's interesting here is if we look into this chart a little bit, you can see year to date, it's relatively low here. And this is based on option activity. But as you can see, it's a little bit low. And then boom, right around the time, look at this, February, it first jumped up February 28th, I think the initial news of coronavirus. And then boom, you could look through kind of that second week of March where it just peaked. It went crazy. And now we're going to look at the historicals on this. But as you can see, over time, it was up. It started going down a little bit, popped up again, and now it's continuing to fall down. So what this means is if you can follow the volatility index, you can kind of get an idea of how volatile things are in the stock market in general. So we look at the 5-year chart. We've seen a couple little jumps here, but really nothing compared to this, where it jumped up to, almost 66. It hit 65, 66 on the volatility index. And over time, it's just been a really, the past 5 years, it's been pretty low, with a couple of, instances here and there. I'm sure we could trace them back to, some sort of, major instance in the news cycle. But now if I max out the chart and we look all the way back here, this was, I think about summer of 2008, right? It was the first big pop up. There's a big pop up there. It hits, it's over 70. That was, that was right before the crash, the '08 crash. And you can see there were, since then, it was up and then kind of hovered for a bit, and then it went back down back in 2010. And then if you remember in 2010 and 2011, there were these couple gaps here where real estate really took another, at least in Phoenix, took really another sharp drop. It wasn't as big, obviously, as the initial crash, but we didn't see recovery there for quite some years. And so, but just a high level, volatility index, it'll give you an idea how volatile is the stock market. And as you can see, it's kind of like it's almost like it sends shockwaves. Whenever you get a really big spike on that VIX, there's like shockwaves, right? So we can expect probably, sometime in the future, a couple more spikes of scares that, they're going to trigger a little bit of instability in the stock market. So, but that's an overview of the VIX, the Volatility Index. Hope you guys will follow it and track it. Subscribe to my channel. Give me a subscribe if you like the content, and then give me a comment what are you guys looking for? What are you investing in? What stocks are you watching? And what do you want to learn about? So please comment and like the video, subscribe, and I appreciate your support.